Welcome to Standard Chartered Money Insights, a podcast series by Standard Chartered Bank that brings you market views and insights on the go.
Welcome to Cut to the Chase. Today is Monday, the 6th of January. I'm Daniel Lam, your host for the podcast. The asset class that has experienced a strong uptrend since the holiday season was the US dollar. Now the DXY index has been making higher highs and higher lows since the middle of December, with strong support at 105.5 and 108. Now the outperformance of US economic data vis-a-vis global data, the signal slowing down of the pace of Fed rate cuts, the threats of tariffs, all of these go to strengthen US dollar compared to other currencies. Now what would be the key driver for the currency world in the near future? Well, that to us would be the Trump's inauguration and the details of his policies. In particular, we need to see what the ordering of his policies will be, i.e. which ones will come out first and which later. We need to watch Trump's deregulation and tax cuts agenda versus his rhetorics about tariffs and immigration control. Now, how this would play out and the degree of this may cause volatility in the markets and raise concerns about Trump's ability to pursue non-inflationary growth. Now you may ask, why is it that the market is pricing in a scenario where tariffs are negative for global growth, but not for US growth? Well, actually, this lies the biggest risk to the macro thesis in 2025, namely that a tariff-driven resurgence of inflation forces the FOMC to hike rates, causing material tightening of financial conditions and a recession in the US. Now, how would the FOMC respond to stagflation? And how would the FOMC respond if Trump were to opt for an aggressive fiscal stimulus program to support growth? So the US dollar may initially surge on FOMC rate hikes, but then plunge as the prospect of yet more fiscal stimulus and deteriorating budget deficits take hold. So yes, right now there's a short-term upward momentum in the US dollar, but we need to monitor the development of the aforementioned risk. So one useful fact that we need to remind ourselves is that during the first 12 months of Trump 1.0, FX was the one key asset class that has shown the most frequent volatility outburst due to the volatile nature of Trump's rhetoric. So stay tuned, and we will be following this and updating you. That is all from me for today. As always, if you enjoy this podcast, please don't forget to rate and like it. Thanks for listening, and we wish you a happy day ahead.
Thank you for listening to Standard Chartered Money Insights, a podcast series by Standard Chartered Bank. For more details, visit Market Views on the Go on our website or click the link in the description.